Welcome in. Jedediah Collins here with you. I don't need to tell anyone what is happening in the world outside today. You look at the markets, you look at ESPN, you look at famous movie stars. Tom Hanks, it's a craze, it's a panic. Everybody is so worried. And again, I'm with you. We are all in this together. What will be remembered as probably the first and most unifying thing that has happened in the world today. Never before have we globally been unified against a common foe and a common enemy. And in some ways, I think we're going to be able to witness and see how much this unifies us, how much this celebrates us as people, how we survive together, how we grow together. So today I wanted to address a subject that you and I know is near and dear to my heart: financial independence, financial freedom. How do we react? How do we have 5 tips to survive a stock market bear attack? That is what we're going to talk about today. Again, this is intended for a younger audience. This is intended for people 50 and under, 40 and under. This is supposed to be 5 tips for how you will survive this stock market bear attack and some thoughts you can have moving forward. Today, we sit down in our driver's seat of Your Money Vehicle. I challenge you, I hope, go to yourmoneyvehicle.com. Come join us on this mission and this journey. I'm proud to announce today, right now, we are going to be launching this initiative through Your Money Vehicle on Tuesday. As the book launches, we are going to be giving away, for every $1 we sell, we will give 1 ebook to a student in the Washington State High School District. So if you come, you buy 1 ebook for $1, 1 student. You buy a $10 book, 10 students. We want to give these out and we want to help. So today, 5 tips to survive a stock market bear attack. Tip number 1 is going to be check your emotions. The main cause of an individual investor's returns to diminish is because they had no emotional strategy. They had no plan. They have heard this throughout time, and yet in this moment right now, it's happening again. This number 1 enemy, your emotions, is why we lose out to the institutional investor. So as we look at this, don't panic. Check your emotions. Stop checking the investments on a day-to-day, even an hourly basis. People are obsessed looking at the ticker go and go and go. Check your emotions, take a deep breath, and stop looking. I would challenge you to challenge yourself. Today, don't look for a week. Don't look for 2 weeks. Don't look until the end of the month. First lesson, first tip is check your emotions, don't panic, and stop looking. Tip number 2, remember your goals. When you built out your financial plan, when you started to save and then went into investing, you had goals, right? Well, if you didn't, now's the time to kind of reevaluate, reset, and see where and why am I building a plan? What is the plan set on? If I didn't have goals, how do I know where I'm headed? If you did have goals, ask yourself this question. Did anything change around your goals in the last week or 2 weeks? Did your goals of any of your vehicles, any of your plan change? If the answer is no, then my question is, why would your strategy, why would your plan change if your goals hadn't changed? Again, this is a moment-to-moment issue. This is not the big picture, which we're going to talk about here in a second. I have friends texting me who are mostly under 40, 45 years old, worrying about their 401ks. Jed, my 401k is getting killed. What do I do? And I say, remember what that vehicle is intended to do. Was your plan to walk away in the next 2 years, 6 months, 5 months? Were you 5 years away from freedom? If not, remember where your goals are. Remember that you can focus on those and withstand some of this short-term volatility. If you are setting your stone and your goal in the future, you are every bit as much to achieve it today as you were 3 months ago when the market was up 20%. You only gain or lose when you decide to sell. Looking back on number 1, we're not going to panic, so we understand that this is not that moment, that time. So if your goals don't change, which I hope for most of us in the last week or 2, our goals have not changed, your plan shouldn't change either. Tip number 3 to survive this stock market bear attack is going to be to think bigger. Think big. This is such a tough strategy to truly hold. But as we understand the market, we understand reward comes with risk. And if you look at it in a short term and you start to panic, then you start to see the risk magnify. A couple of weeks ago, nobody was panicked when it was a bull market. Nobody was looking at the month-to-month return when it was up percentages and 10, 20 percentages. So what you need to do is remove yourself and start to see this bigger picture. How long do you see your money? Do you see it in a day-to-day time frame? Do you see it in a year-to-year time frame? My challenge to you today is to start to see money through a decade-to-decade time frame. Step back from that 6-month, year-to-date, step back from these short-term mindsets. Start to look at it through a 5-6 decade time lens. If you're 30, you have 5 decades of investing to look through. If you're 20, you have 6-7 decades of investing to look at. As you look at the S&P, as you look at the world market over a long-term time frame from decade to decade, you begin to really realize that these blips, these changes, these turmoils, they happen. Ask anyone in the financial industry. They remember the 01 stock market. They remember the 08, 09 mortgage crisis. They go back to the 80s, the 90s. This is the 10th, 11th, 12th time they have seen this. So start to think bigger. Stop seeing a 6-month horizon. Start to see a 6-decade time horizon. And that is going to be where you start to solve and answer some of these questions. Tip number 4, this is going to be a strategy moving forward. It is called dollar cost averaging, DCA approach. This method removes number one. Number 1 was check your emotions. DCA, dollar cost averaging, is going to remove emotions because it builds in a system and a strategy. What that strategy is going to do, well, let's go back to number 2 of goal setting and remembering those goals. If you dollar cost average, you are going to continue to build the strategy to achieve number 2. So this DRIP campaign, dollar cost averaging, simply says, I am going to set up a process and a system, maybe once a week right now with all the craziness, maybe once a month, maybe once a quarter. How am I going to get back into the market? How am I going to get into the market for the first time? How am I going to evaluate my plan? And if I buy shares every week, every month, every day right now, my share price is going to average out. I even look at the future, the short-term time horizon, and say, hey, if it dips in the next 2 weeks and I continue on this strategy, my average share price, dollar cost average, will be lower and my long-term gain will be higher. So what this strategy does is it builds in a belief system that when we think big and we think long-term, we see a future where the market continues to rebound and respond. This problem, this epidemic, this pandemic, this is a virus. This is not a reflection of the economy. The market is a reflection of people's emotions. Right now, if you want to build a system of how to get back in or how to get in for the first time, we have just traveled back in time according to the market and equities. You can now buy into the market at the price it was in 2017, 2018. That's traveling back in time as an investor. That is a major opportunity for young people to either get in for the first time or to start to see their long-term plan come to fruition. So again, you're thinking big, you're starting to set up a strategy of dollar cost averaging on how to drip into the market and to diversify what your price would be and to how you can maybe even capitalize on this idea of us traveling back in time according to stock market pricing. The 5th and final tip we're going to talk about today with how to survive this stock market bear attack. Well, this 5th and final tip is understanding the difference between tolerance and capacity. Your risk tolerance versus your risk capacity. I know this common adage of don't invest money you can't lose. Here's another one. Don't invest money you don't have. Why this panic is not just emotional, but a lot of people leverage their investment. A lot of people borrow money and then go and risk it into the market. All of those people right now are being forced to sell because this is money they didn't have and they have to go get as much as they can left to return the dollars to their rightful owners. So as we start to build out and understand the difference between risk tolerance, this is how much you can stomach. When you opened up your account this morning and you saw it down 10, 20% from the last time you checked, you saw that red. Did it ruin your day? Did it ruin your week, your month? Did it make you sick to your stomach? That means you took on too much risk tolerance. Now, risk capacity is not an emotional, it's not a stomach test. This is an actual withstanding test. Right now, are you scrambling around for cash? Are you looking for dollars to maybe pay rent next month or get through the next month, 2 months? Small businesses across the country are immediately closing their doors because they didn't have a built-in runway. One of those things we've heard about for our lifetime is emergency funds. Right now is a perfect time to realize what the impact and why those are so important. In the future, those might be called Corona funds, because this is an event that nobody could have ever predicted or seen. But your risk capacity is what you can actually withstand. Are you curious or even concerned with the market dropping right now? If you have a few months or years of cash built up, you are more comfortable than the person that is looking to pay their rent check next month and doesn't have that risk capacity number dialed in. So ask yourself, are you sick to your stomach? Reevaluate your risk tolerance. Are you looking for cash? Reevaluate your risk capacity. This is a lesson you can learn today, but it is one that will prepare you for the next time. Because believe me, boys and girls, there will be a next time. I don't care where the market goes from here. There is going to be another event. And that is why education, planning, preparation is vital in the world today. We're going to go back through our 5 checklists and we're going to see, number 1, check your emotions. Do not panic. Number 2, remember your goals. What was your plan built on, and have those changed? Number 3, think bigger. No longer 6 months, start to think 6 decades. Do I think the market will be up 10, 20, 30 years from today? Then how do I start to get back in? That is when we're going to dollar cost average. We're going to start to drip into the market on a system, removing our emotions and having a plan set in stone. 5th and final, measure that risk tolerance, what you can stomach, and capacity, what you can actually withstand. Now, we all know the market is volatile, the market is emotional, the market is uncontrollable. What I want you to do, this last tip, this last advice is take a breath and focus on what you can control. I personally am so happy that I and my family are still healthy, that I and my family are going to be able to withstand this turmoil, but I want you to look at it. What do I control? Right now, I control my spend. I control what's going out the door. I control my attitude, my mindset, where and how I'm handling and preparing. Maybe I'm working from home right now. How do I handle that, withstand that? If you need guidance on how to prepare to work at home, shoot me a note, ask me a question. I love systems, habits, strategies, and that self-discipline it's going to take to still continue to be profitable and productive while at home. Third and last thing you definitely control is your family. Love them, share with them, be happy that you have them as a foundation and as a support. These are items you control. I would challenge and ask you to go to yourmoneyvehicle.com, join the movement, join the list. Tuesday, we're launching the book because now is possibly the perfect time. I've been dreaming about this book for 10 years. And Tuesday, I finally get to see it come to fruition, where some would say, hey, this is the worst timing ever to be launching a book. I look at it and say, I now have a captive audience that is going to be at home, and I have a 30-day or a financial education course that every person can take while they're sitting at home. If the worst thing that comes, or if a positive that comes out of this horrific situation is some people are going to take a personal financial literacy course, pass it, and be better prepared for the next one, I think that would be a beautiful positive in an ultimately negative environment situation. Yourmoneyvehicle.com. I also wanted to announce one last time, as we look at launching the book. For every $1 we sell, we are going to give one ebook to a student in the Washington State High School districts. So you buy a $1 book for yourself or for someone you know, one of those students sitting at home is going to get to capitalize on what they are doing. So Your Money Vehicle, Join the cause, join the movement. $1 gets one student an ebook for while they're home to become financially empowered. I appreciate your time. 5 tips on how the young are going to survive this stock market bear attack. Enjoy the day, and please like, share, comment, questions. Bring it on.